New York Annual Tax Compliance 4C Core. General Business Franchise Corporation Tax. Corporations subject to tax under Tax Law Article 9A generally must compute 3 distinct taxes, and higher of these 3 tax is paid. The 3 taxes include a tax on business income, or a tax on capital, or a fixed dollar minimum tax. A business corporation subject to tax under Article 9A includes all corporations except insurance corporations, transportation and transmission corporations, farmers, fruit growers, and similar agricultural cooperatives with, or without, capital stock. Non-stock, not-for-profit corporations, no part of the net earnings of which inures to the benefit of any officer, director, or member. Continuing Section 186 Taxpayers. The Form CT-3 returns must be filed within 3.5 months after the end of the reporting period. In case the calendar year is followed for reporting, the due date falls on or before April 15th. For S-Corp, Form CT-3S returns must be filed within 2.5 months after the end of the reporting period. A. Tax on business income. The business income base equals federal taxable income, modified for items of income and deduction that New York treats differently, minus investment income and other exempt income that is apportioned to New York State. The current tax rates for business income are as follows. Qualified New York manufacturers benefit from a 0% rate on their business income base subject to certain conditions. B. Tax on capital. The General Business Corporation franchise tax on capital can be computed based on the below rates. The business capital base is the total business capital apportioned to New York State after deducting short-term and long-term liabilities attributable to assets. Tax rates of capital base for general business taxpayers is 0.1875% for qualified New York manufacturers and QETC's 0%. The tax on capital capped at $0.35 million for qualified New York manufacturers and QETCs, and $5 million for all other taxpayers. C. Fixed dollar minimum tax. You may read the below table. Estimated tax payment. All business corporations, including S corporations, whose applicable tax for the current tax year can reasonably be expected to be more than $1,000 after credits, must file a declaration of estimated tax using Form CT-300 and make quarterly installment payments. The due date for the estimated tax payments falls on the 15th day of the 3rd, 6th, 9th, and 12th months of the tax year. Estimated tax payment. All business corporations, including S corporations, whose second preceding year's franchise, excise, or gross receipts tax after credits exceeds $1,000 must file Form CT-300 and pay 25%, or 40%, as applicable, of that tax, to satisfy their mandatory first installment, MFI, of estimated tax for the upcoming tax year. The second preceding tax year is the corporate taxpayer's tax year occurring 2 taxable years prior to the tax year for which the MFI payment is due. A corporate taxpayer that was not required to file a return for the second preceding tax year does not have to make an MFI payment. The MFI is due on or before the 15th day of the 3rd month following the close of each tax year. 33.33% of the remaining tax payable needs to be paid in each of the next 3 installments. Sales and use tax. Sales and use tax is applied to selected services and hotel occupancy, food and beverages sold by restaurants, taverns and caterers. Any office appliances including computers or computer software. Tangible personal property, unless specifically exempt. Gas, electricity, refrigeration, steam, and telephone service. The average sales tax rate in New York is 4% depending on local municipalities. The total tax rate can be as high as 8.875%. Sales tax rates for the period are pre-printed in column E of the return in percentage formats. If the annual liability for prepaid sales tax on motor fuel and diesel motor fuel, or the taxable receipts, is more than $5 million, it is required to participate in the department's prompt tax program and submit Form ST 810. Sales and use tax returns must be filed quarterly, part quarterly, monthly, or annually with the department, even if there is no tax due for the filing period. Refer the below table. One of the following forms, based on the filing requirement, is to be filed to report the state and local sales and use tax. ST 809, monthly filers, part quarterly. ST 100, quarterly filers. ST 101, annual filers. Later non-filing of return. If the sales and use tax return is not submitted or taxes are not paid, or both, on or before the due date, the amount of penalty due is based on the amount of tax due. The minimum penalty amount is $50. Fail to file or fail to timely file a return with no tax due. Penalty will be $50. If late by 60 days or less, penalty will be 10% of the tax due for the first month plus 1% for each additional month, or part of a month not to exceed 30% of the tax due. If late by more than 60 days, penalty will be the greater of tax due for the first month, plus 1% for each additional month, or part of a month, not to exceed 30% of the tax due. $100, or 100% of the amount required to be shown as tax on the return, whichever is less, or $50. Later non-payment of tax. If the sales and use tax is not remitted, fraudulently not paid or omitted from the return, the same is subject to penalty. The minimum penalty amount is $50. The below table provides an overview of the penalties applicable on such non-compliances.